small community. I don't know if you know him. His name is Jason, Josen, Josen, Jossen. That's his last name. He's
Okay.
uh so he's a multi-well nation. Yes. So
Multi-wealth nation.
no, multi-family well nation. So
Multi-wealth nation.
and yes, that's his initial of the company. Anyway, I
Mm.
joined him back in March this year, and I still learning the process. I still haven't really focused, like calling the broker, calling the interview the bank, lender. I mean,
Whatever he teach you, is that what he
yes,
teaching you?
yes. So we we have a like we have like weekly
Yeah.
internal meeting, and then we also
Mm-hmm.
have weekly training with additional guests. Right, they going over the how to raise the capital, raising a
Mm-hmm.
capital, how to talk to the broker and property, how to interview property management. I mean,
Mm-hmm.
a lot of ongoing, but to be honest with you, I don't have time lately, especially summer. I can't like focus on my work and my kid, so I'm kind of like behind.
I mean, that's like everyone like that, right? So uh I think the work that going into becoming an apartment syndicators or like a commercial real estate um investor is a lot. Like it's
Yes,
not easy. It's not
yes,
easy. We
yes,
we
yes.
joined last year Some Route Group. I think it's almost a year and a half now. And I've been full time into it. Like I even dropped all the single family house investing to just focus my energy into this. Um, and Sasha was working full time, but we do this together. So we go
Yes.
to every single training. And with Some Rock Group, they have training every 2 months
Oh,
in
I see.
person or
Yes,
like, virtual, but like kind of like all day thing. So it's intensive. Um, but the goal, I think, is to expose you to enough people that doing the same thing.
yes,
So you see that it's normal. Like people, invest in apartment, people owning apartment, people buy and then sell and make millions out of apartments. So I think that's the most important thing because the more you hang out with them, the more you
yes,
know them, the more open-minded you are. Like you say,
yes,
oh, this is possible. I can do it too.
yes. You're right, Sophie.
Yeah.
Sometimes I feel like I'm give up because
Don't give up.
I'm not around like you mentioned. I'm not around of multi-family investor group
Mhm.
networking. So sometimes I feel like oh, it's such a hard journey by
Mhm.
myself. Um, I don't know if I have time for this.
Mhm.
So it's a mixed feeling.
Mhm. Yeah, always like entrepreneur, right?
Yes,
Like even if somebody go out there and build a business, a lot of other people will not understand it. They don't understand why you invest in apartments, why you can buy a house and rent it out,
yes,
right?
yes.
They don't understand
My parents said
yeah.
the same thing. Why I wasting my time to go to something new, more challenging and brand new, no experience. Why don't just buy a single home and continue doing that? And I'm like, no, I don't want to buy a single home like during Grand Cardone training, they say it's $10, 10 different dollars. It's not, I mean, the way you handle the property management is the same amount, but it's much easier if just in one apartment with 10 units. So I got it, but it's I got it one day, I'm like, oh my God, I don't know. Is this work for me? Is it
Yeah.
fit for me? So
Yeah.
let's
I
see.
understand. Yeah,
Yeah.
there's a lot of people also join at the same time that we join.
Yes.
Uh, in Hi Sasha, in 2023, and I think like grass some rock is one of the programs that very expensive.
Yes.
We pay like $42,000 to join it, and people pay 30,000, 40,000 to join, and some of them they already go back to whatever they've been doing
Oh,
because these are people also, you know, have lucrative business
yes.
or they have like they are high income owners, like earners.
Uh-huh.
They are wealth managers who managing wealth for people earn like husband earn 500K, wife earn 300K a year.
Uh-huh.
And they see from the wealth management side, they see like, okay, where is all this money going? And they like, they going to apartment deals, they go
Uh-huh.
into commercial real estate. Why don't we own that instead of managing for other people? So they jump into it. But then like the immediate return or the immediate pay is not like zero. And you have to put a lot of time and effort into it. And
Uh-huh.
then they'll be like, oh my God, we have young kids, like I have a job, everything, easier to just,
Overwhelmed.
do what we're doing.
Yes.
Yeah. So, and they're like, okay, we're just gonna, do what we're doing and we're not gonna own apartments anymore.
But
So
I will take
don't
your
give up.
advice. Yeah, I will take your advice. I mean, every time if I want to give up, I'm like, oh, Sophie, remind me, don't give up, don't give up. I can do it.
You can do it. You can totally do it. And just need to, I think we just need to keep each other accountable. That's why I do this every single week. So rain or shine, we in Mexico, we in the US, we keep doing this. So we meet people like you, like Andy, uh, other people on the call that I met, like Bob, Jason, they like we keep each other accountable. So we reach our goal faster and don't get distracted. But
Oh,
right, Andy?
yes. Thank you. Andy,
So
you on mute.
then,
Yes, yes. Good morning, everyone.
good
Yeah, we
Morning,
keep each
Andy.
other accountable. We support each other. We also educate each other. So we learn from each other. I learned so much from Sophie and Sasha. And it's like continuing learning every week. So it's good for all of us. Yes.
Oh, nice. Oh, Sophie, I will be in Dallas. I think it's September 17 and 18. If you have time, we can have lunch. It's on me. Just
yeah,
let
for
me know.
sure.
Yes.
For sure. Yeah. So if you be in town, that's great. I would be in Houston though. I think in the September 19. Maybe I'll be in Houston. There's an event there. But I'm not sure I'm consider going or not going. And
Uh,
Andy,
but
you probably know this,
but I
like
will
Team
be
Mice event.
in Dallas on the 17th.
Yeah, let's do the 17th.
Yes, 17. That's Tuesday.
Yeah. So I asked Jason, so remember, Andy, remember Jason, one of our member. So
Mhm.
Jason is somebody that we met during the Blossom Rock event, and he bought a property in San Angelo, and he's still raising money for it. So I asked him to come present about his deal and the updates and stuff. But maybe in the future, today he can make it. But he's gonna share a letter of intent with us. So like then, like there's talking to broker, talking to the bank and all of that process. But when you really put uh, an offer onto a deal, you put an LOI in.
Mhm.
And I asked him to share his LOI with us because he seemed like have some good form on it. Hopefully he would do. But Dan, why don't you introduce everyone first since you're new here? You wanna go?
Yes. Hi, Sasha. Hi, Andy. I'm from Houston, Texas. I just joined multi-family investment back in February this year with Grant Cardone um, mentorship program as well as multi-family well nation. Yes, I joined two programs because with Grant Cardone, you have to be VIP in order to really learn about the process, how to get a deal, how to fire off-market deal, how to get a deal. So you have to spend another 25K. So I decided no, I just join a basic mentorship program. It's only cost me 5K, but it's, to be honest with you, it's such a large community. It's like every Friday we have a meeting. It's like thousand participants, and if you have a question, you have to submit ahead of time, or you have to raise your hand during the meeting. Sometimes it can get to you, sometimes it cannot. But anyway, so that's why I decided to find another mentorship program. With this small mentorship program, I'm able to have a team meeting, weekly team meeting, weekly training. But like I mentioned with Sophie earlier, I'm kind of like behind lately, especially summer, because of my workload and because of the kid off school. So I just try to find excuses anyway. But
What do you do professionally, and can you introduce about your background?
Yes. So I'm a clinical research associate. So we call us as a monitor. So basically, I'm a contract 1099 employees. So I do a lot of, I travel a lot, almost every week, to go to different cities so we can manage the patient who participate in the clinical trial. And my project right now, we're doing the kidney rare disease. Yes.
Gotcha.
Yes, that's me. I'm not sure I know. So Sasha is your husband, Sophie.
I am, yeah.
Nice to meet you.
Nice to meet you. Yeah, it sounds like you're doing very important work, Diane. And also totally understand what you're saying. It's sometimes so hard to find time to do this when you have a full-time job, and totally understand about being in a large mentorship program where you don't, feel like you have a direct connection to the people running it. So yeah, I mean, I can say a lot about how expensive the program that we joined was. It was a lot for me, and for Sophie. But it's looking back, it's on a smaller scale. It's not thousands and thousands of people. It's like, I don't know, 500 people. It feels like a number like that. But it doesn't matter what mentorship you get, program you get, if you don't have time, or if you're not like fully into it. So, to be totally honest with you, we're also veering like in and out of it, right? Our commitment isn't 100% all the time. So it's hard to be 100% dedicated to it when there are competing priorities and needs and shiny objects, right? All the time. So, and comfort zones, right? I have a comfort zone. Sophie has a comfort zone. Anyway, so all of this is to say that Sophie's right. Like, you just have to kind of keep going. But there are ways to hack it. So, for example, like when you don't have time right now to start becoming a GP, right, tomorrow, there are things you could do that you need to do before you can become a GP. So, for example, you definitely need to become an LP before you can become a GP, right? So for us, we invested in 4 or 5 deals as LPs already. And when you start talking to brokers, when you start talking to other potential partners, they will definitely ask you like, what experience do you have? And so I would recommend investing as an LP in deals. You don't have to invest a lot, invest the minimum, right? But it'll help you. It'll help you as an investor understand what is the investor experience, what is an investor looking for, what are the types of deals out there, the lingo. You learn the most by doing, or at least I do. And so that's kind of the closest you can come to doing at the stage you're at right now. So that'll be my recommendation to add to Sophie's.
Oh, thank you, Sasha. I have a quick question, about the LP. So I just this is my mom asking me, ask the the experienced investor. She say like if you like, for instance, if you invest as LP for 50K, have you have any, or have you know, or have you have any experience that the investor will lose their original investment on that deal?
Yeah, I don't have firsthand experience in that. Every single thing we invested in is continuing to turn distributions and pay out distributions, and that, you know, we haven't seen problems. But does it happen ever? Yeah, it does. There's no investment without any risk, especially in an investment as good as this, right? I mean, typically it's a high risk, high reward. I mean, you can invest in a savings account or a CD, right? It's way less risk, and you get 5%. So that's the other thing, right? So yeah, we've heard of cases, and it's in the media out there too, where people have lost their investments. It's not an impossibility, but it is a minor case, right? Most of the time you hear about it, but most of the time that's not what happens. And as humans, we're wired to feel more bad news, the impact of bad news than good news, right? So it's like, I'm driving to work every day, right? I don't call Sophie and say, success, I've successfully arrived at the office. That's amazing, right? But if I get into an accident, I'll call her. So, I don't count the wins as I count the losses, right? So it's a huge win. I got to the office without an accident. That's amazing. But why don't I call Sophie and tell her about it? Well, because that's just, what I expect.
Expectation. Yes.
Right. But it's the same thing here, right? Like when I look at my stocks, for example, of course, I still have diversified. We're diversified, we invest in the stock market too. I look at it every day, and when it's all in the green, I smile and I, go do other things. When it's all in the red, I spend much more time on it thinking, okay, what happened today? Well, this stock is down 3%, 5%. Oh my God, is it like a trend? Let me see what happened in the last week. Is it trending down? Should I sell it? Right? Like I start, being worried more and more about it. But when it's green, I'm like, oh, okay, cool. Okay, moving on. So, it's the same thing. It's just we're wired to that way, right? As humans, and that's sort of a survival thing. But anyway, sorry, I'm on a tangent here. Yes, does it happen? It does. It's a rarity. And of course, the job of an investor is to find the right partner, not just the right deal to invest in. And so, that's something that Sophie's really good at, right? Like when she's doing due diligence on investment, it's not just about the investment, because most investments, to be honest with you, are kind of the same, right? Yeah, it's different class or different neighborhood or whatever, but they're mostly, 2x, mostly 5 years. The real differences between the people and the operators. And so that's the due diligence that you need to do.
Thank you.
Yeah. Also, another thing I want to add on to what Sasha say is, this is not for somebody just have, 60K in their savings and want to put 50K into a deal. It's really not. And as sad as it is, it's not for people that don't have money and not afford losing that money. So if somebody have $1 million to be able to invest and they think that they want it to grow fast, this is the way. But if they just have $100,000 and they just want to make it safe, then it's not for them. So that's why a lot of deals just open for accredited investor who have $1 million net worth or more. I think it totally makes sense. But it's good for young entrepreneur who understand business. And because they understand business, they know that this is invest in a business and going venture together. And they afford to lose because they feel young and they're making tons of cash every time. Even their net worth is not reaching there yet, but they're putting this money into equity. So their net worth can jump once they exit this deal. So it's not for everyone, obviously. And everyone should structure their portfolio the way that it makes sense. Like, some are safe bet where you never can lose money. Some is like, take some risk, but your role is way higher. And we often talk about the average deal, which double your money in 5 years kind of deal. But in the growth periods where 2018 to 2022, that 4 years, people triple their money in 2-3 years in this deal. And that's what make people greedy. And because people greedy, they overbid on prices and they get into deals with like extremely high purchase price. And when the market interest rate adjusted so fast, people get into trouble. That's why there's people losing money right now. And there's deals that have capital calls right now. But that's like, if you look into the 20 years growth of the multifamily, there's, dip, and then there's growth, then dip, and then growth. It's just the market itself. Yeah.
A roller coaster. Yes.
Correct. But it's not a bad roller coaster, I would say. If you're in it for a long term. So when we started this and we pay a lot of money to learn this, we're like, okay, we have to be in this for 10 years, 20 years, whatever, until the rest of our life to be able to, recoup the return. And that's persistent. Persistent is like an amazing virtual that everyone had to learn, because like once you're in even in real estate, like invest in single family houses, and they invest in single family houses for the past 20 years, right? 15 years. And persistent. He's like, he can tell you about his portfolio and persistently working and putting money on the side to just invest into houses and invest into houses until he's totally earned his freedom. Andy, tell us a little bit about yourself.
Hi. So I wish I went into real estate full time a decade ago, but I spent the last 2 decades working for tech company and investing on the side. So I keep adding single family to my portfolio. At this point, I don't have to work for tech. I just stay home. I cash flow very well. Um, but I am investing in real estate just because I want to have more. Um, so it all depends. Persistency is the key. You want to stay in the game. You don't, if you quit, you lose out because there's a lot of wealth in real estate. Um, um, Maybe like 80% of people quit, the other leaving the money for everybody else. So stay in there, keep learning, keep connecting, make network with people, and buy small, and then buy bigger and bigger as time goes by. Yeah.
Thank you, Andy.
Mhm.
So Andy, may I ask, have you buy any multifamily?
I am an LP maybe on like 6 different projects. So I buy into syndication. And on the side, I'm trying to buy I don't really care about being called GP or not. I don't care about the name. I just want to own assets, in multifamily assets. It's a different game, but it's a game that allows you to have a lot of control. Where if you can do something, you would raise the NOI and your property value would skyrocket. So learn learn the mechanism is how to increase NOI and see your property appraised for $1 million more within a few years. Like one of the underwriting that Sasha did the other week, you could see that year one, it could jump 800 to a million. Year two, another 5 or 800,000. Year three, year four, you can see that if you increase the profit of the apartment by year five, this thing is worth $4 million more than what it was 5 years ago. So you can see every year the value of the property jumps as long as you execute the business plan, which when Sasha underwrites it, you could clearly see cut expense, um, renovate unit, um, put in better tenant to have better vacancy, and as long as you increase the annual profit of the apartment, property value has jumped by a lot. Yep.
Thank you.
Mhm.
So when
So
we first
Sophie,
joined, yeah,
go,
go ahead.
I have a quick question for you as
Yeah.
a experienced investor. So for a newbie like me, what is your advice to someone so new with the apartment investment? Like how many units they should acquire, um, set a criteria for their first deal?
So so when I first started, um, we also get advice to be LP. And then it feels so uncomfortable because we're losing control. Like we're familiar with, buy a house and control it and all that. So we think that, oh, okay, maybe they want to raise funds from me. So that's why they want to tell me to be LP. Uh, and it's benefit them, not benefit me, right?
Yeah.
So I was like, okay, let's buy something ourselves. So we were under contract for probably like 32 units and we think it's the right move and all that, but then it fell through. So later on, after we go through Bresson Rock, we talked to so many apartment investors, and a lot of them tell us that you have to go 60 or more to be able to have a person there all the time to really care for the asset. If you go lower than 60, your income is not enough to pay for the payroll and for a person to take care of it for leasing or even like management and all of that. So to serve your tenants better and more scalability, I would say 60 or more. And to do that, the the other thing you have to focus on is first is to do LP and underwrite deals, so to know how it works. And being an LP is like kind of like you sit in to a cinema to watch the movie of this deal coming from year one, year two, year three, year four, right? So you know the movie, but the underwriting is the number that capture that movie and show you that how it make profits. So when people pitch me deal at the first time, they say that okay, we're gonna buy this apartment for $15 million and we're gonna sell it for 30 million. I was like, you buy for 15 million and you sell for 30 million. It's like, what is it? Like, it's not true. It just sounds like correct. Or you buy this for $30 million, you're gonna exit in 5 years for $60 million. You create like $30 million like that. I'm like, it's hard to believe. But once you be an LP, you look close into it, you really underwrite, you really see people in the space and they tell you about their deals. There are people that I met in the Bresson Rock group that invest 75 deals already. Just LPs. They don't actually do it, but they're capable of understanding it. So the problem here is for us, like when we first started, we didn't understand. We didn't understand how deal works. We didn't understand who to trust, how to approach things. And I think that's like a journey. Like you have to just put a time in and explore yourself more and more and understand it. Yeah.
Thank you, Sophie.
And we currently working on a deal as well with Andy, a 66 unit, right, Sasha? And we went to look at it. and try to put an LOI in. And I think the whole process should expose us to, how to buy deals and all of that. Not necessarily gonna be like buying that deal, but the 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 work toward it, like help us gain more knowledge that later on when we look at a deal somebody show us, we're like, oh, this is a great deal. Let me put my money in.
Yes. That's why they suggest like to find a deal in Craigslist and just underwrite it every day. Underwrite at least 1 or 2 deals every day. So you can be familiar, you can be pro on underwriting. So I haven't, I heard, but I haven't applied myself yet. I'm so embarrassed to say that.
No, there's nothing embarrassed. Like it's very hard by yourself, but it's easier together.
Yes.
Easier together.
Yes. Thank you.
And you need partner in this business. Another uncomfortable thing is you have to partner with people. You have to wait for that person communicate with you. You have to communicate together. You have to have a vision together. And I think most big business gonna get built when you have partners. So it's hard to go big by yourself.
Yes, I agree. Yes.
You want to talk about that deal, Sasha and Andy, that we looked at? What do you think?
Well, so I reached out to a few people yesterday, asking them to take a look at it, from the Simrock group. So we got 2 people to look at it this week. They didn't say when exactly, so I'm just waiting. I'm gonna share with a few other people as well today. I did have a broker call me yesterday. Andy, I didn't have time to tell you, but a broker reached out to me yesterday for the first time ever. So maybe that's a first that a broker called me, not the other way around. And I said, yeah, this deal, 60 units in Dallas, 1960 build. They couldn't sell it for 4.9, which they were asking. I think it's called Landmark something.
You want to share the OM if you have?
But Sasha, that landmark deal, I think the 3 of us took a look at it before, right? That's the one that's like really run down C minus
Yeah.
location.
Yeah, no, I don't know. I don't remember the location, but it's just I remember it's like 1960, and at some point Sophie said, "Look, it's a 1960 deal. Do we really want to mess with it?" And it's not. It's small. Well, small. It's on the smaller side, 60 units. So
I remember that one. So what happened is that one, just on the other side, it's like a little plaza, but the plaza is really run down. It's like really run down, homeless people walking around the plaza, and that's why this property is sitting just it's back parking is kind of sharing the same parking as the plaza, and that's why it's having trouble. It's
yeah,
like
for sure, for
near
sure.
like downtown Dallas somewhere there, South Dallas,
Yeah, it's like a greenish color. It's somewhere. Yeah.
yeah.
Anyway, so this broker called me and said they couldn't sell it for 4.9. The new width is 4.5, but they'll probably take low 4. So this is what he told me. So I didn't have plans to re-underwrite it or underwrite it, but it's basically like low 4. If you divide, let's say it's 42 by 60 units, we're talking about 70K per unit. So that's kind of where we are. But it was interesting. I don't know if this makes me more interested in that deal, but I think it gives me a little more confidence in the 66 unit deal, because that neighborhood I did not feel unsafe there. And yeah, there's some weirdness with the numbers there, but again, I think there is a number at which that deal makes sense. It's not maybe 5.5, but I would love to still put an LOI of 5 to see what happens.
Wait, Sasa, may I ask you a quick question? When you said 60 units, 75K per unit. It's not, can you share like why you think it's not an issue? Is that 75K per unit? Is that like too low, or is this? I just try to
Well,
understand your thought.
yeah, it's and mind you, like all of this, when I say X per unit is too low, too high, right? You can only compare things in a localized area, right? And that are similar, right? We talk about C class, it has to be compared to C class. It has to be in a similar kind of neighborhood in a similar locality. So that's the only, right? I mean, I would not be comparing like this building to some building in, you know, whatever, Houston, and just talk about, the cost per unit. But in this case, we're just talking about localized deals to Dallas, to C-class neighborhoods, to C-class buildings. So that's why this comparison is a little bit more valid. It's still a bit of a kind of, you know, maybe an indicator, not something that's driving a decision. That's all.
Okay, thank you.
Sasha, let me mention this. I can't remember if it's the landmark apartment or another one, but I was analyzing the rent roll for one of the apartment in South Dallas, and I find out that 25% of the tenants there belongs to a program related to mentally health people, meaning people that were having mental health problem, and the city put it in that apartment. And then that's 25% with tenant. And then there's another 25% with tenant because I saw name like program that was listed. I saw like something like mental health, and there's like 10 tenants that belongs to that program. So I searched it up. So 25% of the tenant belongs to some mental health. Another 25% belongs to some poverty assistant program. Almost like they were homeless and the city kind of like just ran a place for them in that apartment. So Dallas does have some interesting apartment, and you can when you look into it, if you dive deeper, you will see who the renter is on it. And
Yeah,
yeah.
I think it makes sense, right? At the end of the day, right, it's not like the city imposes this on property owners. It's more like uh, probably a situation where they couldn't find renters, or the city was offering them a price that was more than what they were charging in the open market, so they kind of maybe went for it.
Mm.
I doubt it's like a condition of a loan. These are old buildings, so I don't think these are like programs that are, given in exchange for better tax breaks or whatever. So I think that's kind of what happened. And yeah, even I I would look at the terms of kind of the length of that lease, right? If anything, it maybe is an opportunity, because when that ends, um, you can improve the quality of the tenants and drive more value. So it wouldn't be something that's going to deter me right away. Just even though my first reaction is, caution.
That's my plus too. Like, I don't want to deal with that. Right. So like we already deal with enough tenant in single family house that, with housing voucher, and there's different kind of tenant with housing voucher. There's people that have assisted by the program, and there's people that fully on the program and got different association to help with them, like with mental illness or whatever, like homelessness, and those are the worst. Because the people that get assistance from the program that still working, and they pay rent but not like partial rent, they still somehow responsible, and they want to keep the the housing voucher, the way it is. So they perform. They are good. They try to be a good renter. But people that have no skin in the game and don't have to pay rent, and it's hard. It's hard um to work with those tenants harder. Another thing to think about is like any property management company, what kind of tenant do you want to take on? Because it would be harder for them to deal with C class, D class tenant, and it's easier for them to deal with A, B class, right? That's why a lot of people advise like, okay, go for a normal B class first in your first deal, so you don't have to deal with a lot. Because even a normal B class, you're gonna find problems there. Uh, there's just a lot of problems to be solved, and if you already see problems, then it's gonna be a lot of problems to deal with. So to just be easy on yourself, and so you don't give up. So I have a friend who bought a single family house for flip. They flip it, everything done. They didn't lose money on it, but the experience was horrible. So that's why they quit doing that. They never touch real estate again, right? So that's why like our first apartment deals also, I think the same way approach it, make it easy on ourselves so we can keep going. So I you have another opinion?
No, as I said, my first reaction is what you were saying, right? Caution, and we just went through this. Don't want to go through it again. But also, if there is if I look at it in a different way as like an opportunity, then I say, okay, when these people leave, and if they leave within 6 months, let's say, then that's great, because that means we can renovate units, we can increase rent, et cetera, improve the quality of the tenant. So you can look at it both ways.
Yeah. So next step, do you guys want to put an LOI on that 66 unit that we underwrote? And how much do you think would be the price that we offer them? And
I want to offer them 5. I think that's they have mid 5 and like 5.5 offers, at least based on what I'm understanding. But I don't want to put in an offer that is just gonna be too low ball, and still want to leave this with a good reputation of a potential future buyer. So I think 5 mil is a good offer that makes it 75K per unit, whatever their finances are.
is it 75? 75, 66 is 4.95, right? Yeah. Well,
Yeah, which is correct. Yeah.
Yeah, so just need a LOI template. So I'm gonna look at Brad's website and see if there's a template for LOI, or get one from Jason. And then we'll see what happens. I mean, most likely nothing's gonna happen, but it's still a good experience to put in an LOI. That's something I've never done before. That's the first time we do more than just underwriting and talking to this broker. But the other thing I realized from this is like, I sent a bunch of questions to this broker based on some issues that came up from the OM and from the underwriting. And it was good to have Andy to talk about it together, because sometimes he sees a hole in it, or like something strange. Sometimes I see something. So it's good to talk about it, right? Because sometimes like one of us sees something, but there's an explanation to it that we can find. Sometimes there isn't. And so anyway, so I came up with a list of questions, sent it to the broker, and what I realized is that I learned something from their response. Like, for example, they include something in the response. It was like a weirdness in the numbers of how much they're spending for make ready and maintenance. but the response included a clue, right? Which was, typical units span, typical properties there spend 500, 400 to 500 per unit for maintenance and make ready. This one spends 550 or whatever, 530. So I was like, oh, interesting. Okay, I didn't know that. So now I have this number in my head of 400 to 500, kind of like a rule of thumb. If it's, if I look at a T12 where that's not the case, then that's going to raise some flags for me in the future, right? Like, is there a problem here, or are they under spending on maintenance? There's deferred maintenance, right?
I also have doubt that 400 to 500 per unit make ready as well, because it's from the broker. So you have to ask all the apartment owners to see what is the real, make ready number that they have. Because should trust, like I think in Rats of Rock Group, they say should trust 30% of whatever broker say.
Both. Yeah. Yeah, the numbers just don't add up there. It's a weird situation. So that's okay. Again, like whatever the numbers are, I think there's a number at which this makes sense and a number at which it doesn't.
Yeah. Also, like, this is the buyer's market. So you don't have to give a solid, like, non-refundable deposit or something. So you can just like, okay, this is my offer. This is the amount deposit that we're willing to do. It's refundable. So during that time of due diligence and everything, if something happened and you came to close, you can always get your money refunded. But it has to be like reasonable, reasonable thing, not like out of nowhere you change your mind. That's not.
Mhm.
Andy, how much do you wanna buy this deal for? Is 5 the number?
Yeah, 5 million, the numbers work at 5 million. That we can get a 2x, and it is a discount and it has a much better cap rate for protection. So 5 million is the answer. And also partly because he does have interest. There are other people that are interested in the group in it. If we go too far, we won't even be competitive. The problem is the property is on the market and there's other competitors. So 5 million is fine with me. Yeah, that works.
Well, another thing, Professor Rick told me that like people, the broker will tell you that you have other people, looking at this property, there's 10 group, whatever. But honestly, they don't have any offer.
Yeah.
And he was selling his. He's selling his. That's what he tell us. Like, I'm selling ours. So I'm selling mine. And my broker tell the buyers like, okay, we have other groups, so best and finals, all that. Like, but honestly, there's no one. Just
Yeah.
one offer. Like, so don't be afraid of just putting an offer right now. And they desperate. But like sellers are desperate.
Yeah. They say that when you negotiate, assume that there's no competitor. It's just you and the seller. Because if you start considering other sellers, you become self-negotiating, negotiating against
Exactly.
yourself. That would be bad.
Right.
So just ignore, act like there's no competitor, no other bid, just your bid, and that's it. And take it or leave it. The seller should take it or leave it, or else you have 10 other apartments that you can look at. Yeah, or else you'll be self-negotiating yourself and you accidentally will end up paying more just out of your own thought. Yeah.
Yeah, I think so too. And honestly think this deal, you can just offer 70K per unit. That's it. Because first, that would make it a good deal rather than an average deal. You want a good deal, you don't want an average deal. Second, they doing something fishy by, kind of like hiding the expenses and all that in their number. So you don't know what's gonna happen next. Whatever you can negotiate or lowball them, like, hey, you want me to walk into something unknown? There's a price for it. I can give you a price, but it's kind of expensive. It's like, give me 500K, I walk into this unknown, right? But if you don't give me any incentive to do that, then I want to take on those problems. So that's why I think like 70K per unit is fine, and then that make it how much? 4.6, 4.65.
Mm. If I could share something quick, I was analyzing another property last week in San Marcos, Texas, which is 40 minutes south of Austin. 40 acre, 40 acre, 17 um, houses on 40 acre, and broker won 6 million. I lowball him at 4 million. I thought he would yell at me the next day. He didn't. The next day he says, Andy, we can still talk. 4 million's low, but we can talk. And I'm like, oh, 17 houses on 40 acre. And I lowball you 2 million down and you didn't get mad. So that shows motivation. Um, um, but then in my view, 40 million for 14 or 17 houses isn't exactly what I'm looking for. But you can see that
Yeah,
it's throw
the
off the
market.
number. Yeah, the market. It's a buyer's market.
Yeah,
Yeah.
that's why people say that, like, okay, this is not a good time, you gotta wait, all that, right? Like, but I think this is really a good time.
Yeah.
Because you're a buyer, like we are so lucky. We're so lucky that we didn't get into the market in 2021 or 2022. A lot of
Yeah.
people just a few steps before us, they regret because they went into deals that doesn't make sense. Right now, it makes way more sense than at a time, and nobody buys because of all the bad news, because of the election, because of everything. So I think we should be like putting an offer and buying, but we should negotiate as much as we can because we can, right?
Yeah.
And we can afford to make mistake too because as a buyers at this time you have refundable deposit and stuff. And in a seller's market, everything is non-refundable, or you won't even get a deal. You won't even get to interview with the broker because they eliminate you right away when you're a newbie. You don't have anyone that have experience yet in your team. They're not gonna talk to you. Because right now is the time where we can talk to any broker because they are desperate to get a deal done.
Awesome.
Good to know. Thank you, Sophie.
Thank you guys.
Sasha?
Are we wrapping it up? Is this we're at the top of the hour. Cool, awesome.
Yep.
Well, thank you for joining, Diane. It was really good to meet you. Always good to see you, Andy. Let's keep going. I'll let you know as soon as I hear back from the people I reached out to, and then if you find an LOI template, do share it. Just send me a message.
Sure.
Awesome.
Yes.
Good.
Thank
All right.
you. Thank you.
Thank you.
Bye, guys.
Bye, Dan.
Mhm.
Bye-bye.
Bye-bye.
Yeah, bye, Dan.
Bye.
Bye,
Bye,
Andy.
Sophie. Bye, Andy.
Yeah, bye.
Bye-bye.